Hi everyone, it is Saturday, November 23rd. This is Liam McMahon with the weekend video. I hope you guys are enjoying your weekend. So far mine is going just fine. I'm going to run through the end of last week and talk about what I'm looking for next week. Considering some of the moves that we saw last week, especially in the Aussie, we will be looking for very particular things next week. I don't like trading pairs after dramatic moves, so the Aussie will be a little bit off limits. We'll be looking for some specific catalysts for that. But we'll be carefully talking about and looking at the pound and yen this week. So do me a favor, pause the video, read the risk disclaimer. It should now be on your screen, and then we'll go to the charts. Alright, so we're going to start with Aussie Yen. Aussie Yen is in danger here of a breakdown. You can see we put in a 4-hour close. Let's actually get this drawing. Try to get this drawing as precise as possible. Alright, you can see we did put in a 4-hour close here right below this trend line. We couldn't sustain the close below. We moved back above it. But still, I think that Aussie Yen is at risk, at least for a breakdown here. Of course, it's held up really well considering how far down Aussie dollar has gotten hammered. But you can see Aussie dollar spiked going into the close. And Aussie Yen didn't follow it. That's because we saw a little bit of weakness here in dollar yen. So I think Aussie Yen is at least worth watching. Alright, it's certainly not oversold like the rest of the Aussie is against everything else. If we do break down, be it because of continued Australian dollar weakness, which I'm certainly not ruling out, or if it breaks down because of the yen reversal, either way, first major support is about 90.80, so that's about 210 pips below market. So this is definitely a move worth keeping an eye on. So let's talk about Aussie dollar briefly. I don't have a ton of interest in trading at the beginning of next week, but I do think we are in the process of breaking down towards 89. I would love a bounce up towards about 93, this red zone here. I would love to start shorting it up in this region for a continuation down of that move towards that 89 figure. I picked 89. We have a small open gap down there, and we also have these major lows here at 88.47. I do think that is where we're headed first. I'm not willing to say that that's where we're going to stop. If we take a look here at the daily chart, you can see that the pair is starting to look increasingly bearish on larger time frames. All right, if we draw this fib here, you can see that's a 50% fib hold very nicely. And if this carries out, all right, let's go to the weekly chart. If we play out sort of an ABCD type off of this 50% fib, we're looking well below 84. Actually, I can't get my chart to zoom out far enough to see how low we would go. But it is quite a ways lower. This move here is a basically 106 to 88. All right, so what is that? 200, 800 or so pip move. So certainly we could be in the mood, or another 800 or so pip move could be in the offing here below 88. So could be a very aggressive move lower. That would certainly make the RBA happy. We'll see if there's any sort of catalyst for it. Risk off, retracement in equity markets, both US and global, would certainly cause it. But I mean, that's just one potential here to keep in mind. The shorter, moral of the story is look for retracements up towards the 93 area to get short towards 89, and then from there it can do whatever it wants. Real quick, Kiwi, all right, trying to break down here, not doing it yet, but it is trying. We are pretty close to breaking down below these major support areas. I've listed 81 as the last remaining area. We bounced back here. We're retesting some resistance now around 82 to start next week, so that's worth watching for a potential move below 81. To me, Kiwi is not clear. It is very choppy, especially against the dollar, so I have no great interest in trying to trade it. I do have an interest in trying to trade Euro Kiwi, however. Next week, we are retesting a potential break of this wedge. This was a chart of the day where I was bullish somewhere down in this area. I haven't really been trading it long, but I've certainly been looking for this move. Now that we've started this breakout here above 166, we will see if we get a bounce here to start next week. Potential long up towards 172, 173. Pound Kiwi, let's switch gears to the pound pairs here. Pound Kiwi is off to the races. If we get a major pullback here, and get back down towards about 194.50, we could try to buy it. Until then, I'm not greatly interested. I might try to fade it off of 201, but not really interested in trading pound Kiwi much. The Euro Aussie pound Aussie combination I am interested in. Again, going to need some retracement. I very much doubt we'll get back down towards 145, but if we do, that's certainly a buying opportunity here on Euro Aussie. We do have a measured move at about 148.72, so if we see some consolidation or something like that in the beginning of the week on Euro Aussie, that could be a nice opportunity to try and get long. Pound Aussie, okay, same deal, broken out, it ran. I mean, it broke out at like 173.25. We're at 176.75. So yeah, it's gone. I mean, I have talked about how the weekly chart of pound Aussie is the most bullish chart I think out there right now. Certainly we got that weekly close. So if you are a macro trader that you're looking for a big time move higher, this might be it for you. You could buy pound Aussie with a stop at about a 600 pip stop, which again, you need to know that this is your trading style. This is not mine. I will not be doing this. But if you are that kind of macro trader, you could have a 600 pip stop, and your target would be about 198, so about 2,200 pips. Okay, so just shy of 4 to 1. Pretty good risk reward, but again, it's a very particular style of trading. I can't really advocate that. For those shorter term traders, those more like me looking for retracements and consolidations up here to try to enter long, is probably the best play. One thing that I should caution here, I will be considering pound dollar shorts, all right, at the beginning of next week. My ideal trade here is we see a gap up here to start the week. We gap up into the 162.40 range, which should only be about a 15-16 pip gap. I would start shorting it there, looking for this sort of move lower. I have it drawn out here. Third test here of this trend line, retracement down about the 159 region. Worth noting that you can call this a bull flag if you want. All right, so we could see a breakout and higher, but I am right now, with the way that the rest of the currency pairs have been acting, the way that Aussie and Kiwi tend to look, I am looking for pound dollar shorts, so that's worth noting. Last but not least, let's do the yen pairs very quickly. Okay, we already looked at Aussie yen, potential breakdown here. Dollar yen, 101.50 is the major resistance that's holding so far. If we do see a trip back down to 150, that's a buying area. Euro yen, okay, that's off to the races. Don't have a great setup on Euro yen right now. Pound yen, same deal. If we do get a move back down towards 162, you could try to buy it there. Kiwi yen, okay, testing trend line support, bouncing off trend line support, so watch that trend line. If it breaks, great. This does start to look like an ascending triangle. Those are bullish, so that is worth noting. But, watch 82.10 or so. That's the magic level. I lied. We'll do one more. Everyone's favorite, the euro dollar. Euro dollar, I am also bearish. I was bearish down here, which was wrong, but I maintain that bias. We'll see how we handle the 50% fib. You can see this rejection here. It's actually a very interesting fib conflict right now. Very, very briefly. Okay, we held this 50% fib. You can see that there. It caused a big sell-off here, but then on that sell-off, we held the 618% fib. Okay, so we do have a bull-bear battle line here right around 135.75. We're going to open the week pretty close to at it. So that is definitely a pair that you want to keep in mind. To me, I remain bearish. All right, I think that this 618% fib test and bearish engulfing, we are now starting to work off of, and I think we're going to continue lower. All right, that's the 50% fib that we held off of. So I do think that we are going to see lower prices for euro dollar, but I have been wrong before, and I will certainly be wrong again. So we'll see how that plays out. But euro dollar is very close to a key level here to start next week. All right, thanks for watching. Enjoy what's left of your weekend, and I look forward to talking to you soon.